Welcome to a CNBC panel special on investment during a pandemic. Now, where can African startups find the capital? We have a panel of experts in the industry to help us break this down. On this panel is Christelle Kwizera. She's the CEO of Water Access Rwanda, has made some funding this year, and she's going to let us know on how she's been able to achieve that funding. We also have Alex Nare. He's the CEO of the Rwanda ICT Chamber, and Stefan Eloise Grass, the CEO and Executive Director of Digital Africa. Now, for a bit of context, in 2019, more than $1 billion were invested into African startups. Now, while this amount has increased significantly in recent years, it is still far below the investments made in the rest of the world. Access to financing, therefore, remains one major obstacle for African startups, with less than 4% successfully able to finance themselves. Now, as you can imagine, this has been further affected by the COVID-19 pandemic. So what is the situation like for startups on the continent? Thank you for joining us. Alex, I want to start with you and with that question. What's the situation looking like?
Grim and green at the same time. So the situation, depending on the vertical that the startup is serving or is playing in, we have seen really varied results. Those that are in the e-commerce and the financial technology space have thrived, whereas those that are servicing primarily the transport sector, whether it's digital payments for transportation, or other travel, tourism, for example, have really been hit hard, and most likely will not be surviving. We will not be surviving until recovering until later on 2021 or 2022, depending on how the pandemic continues. Those in the healthcare, edutech, e-commerce, fintech, in sectors, agri-tech as well, have thrived to a degree, depending again on where you are on the continent, where internet infrastructure and connectivity is high. That has been demonstrated mostly with good results. We've seen funding actually till now. We're still seeing deals being closed by venture capital firms. As recent as last week, Aero Robotics raised $8.5 million from NASPAS and CAFI, so Africa Invest. So these kind of deals are showing that there's actually potential and there's resilience, especially in companies that have already established revenue streams or business models, proven business models, and all they needed was the funding to go to the next stage. So it's it looks really opportunistic in a way that there's some opportunities that are opening up for the industry, particularly in the tech space, and more investments are bound to join in this and to take advantage of the benefits that technology actually brings in a situation like this one that we have seen in the last 10 months since COVID hit the global world.
Quite a green picture there, Alex, that you have painted. You've listed a number of industries or sectors that seem to have been the major attraction for investors in this COVID field. Yeah, but Crystal, your industry hasn't been mentioned by Alex there, but you have been able to raise quite a sum of funding in 2020. How has it been for other players in your sector?
Yes, actually, to agree with Alex, I mean, he didn't mention water industry per se, but he did mention businesses that are established and have clear revenue lines. And it's been the case for us. As far as our profit and loss statement this year, it's the most terrible it's looked. I'm extremely worried, actually. I want the economy to recover because my business is going to recover that way. But in terms of fundraising, we have not been affected at all, except positively. Right now, the world wants to build better. There's a focus on better infrastructure that prepares for future pandemic. And water has been a key focus for everyone. Even at the beginning of the pandemic, there was a lot of investment into WASH, which covers water, sanitation, and hygiene products. But a lot was going into more FMCG, like masks, soap, hand sanitizer, and things like that. So we're starting to see a lot of investment coming into proper infrastructure as well, with the increase of hand washing facilities across the margin, with markets, schools, all needing all kinds of hygiene facilities that before we just didn't feel the urgency to have. So that has increased our demand for our services, but at the same time, some of the more customer facing revenue lines were heavily affected, much as everybody else. Even if people have more need for water nowadays, their purchasing power has been lower. So as a company, we reacted with solidarity and compassion, and we've offered a lot of services for free, and even extended payment terms for some of our clients who we know are going to recover. So in terms of investment, this is the best time for infrastructure investment. Infrastructures are always a pretty stable investment line, and whenever capital is fleeing more unstable markets, like whenever there's instability in the economy, a lot of money goes in the infrastructure space. So I guess we're seeing some rain down from that, but at the same time, COVID-19 is a sanitary issue, so sanitary solutions are going to receive more investment, not just this year, but even moving forward. There is a renewed interest to invest into the sectors, into the solutions that we offer. So definitely we've been on the green side in terms of raising investment, but much like everybody else, our revenue and profit has been heavily affected.
Crystal, you were on course to raise about close to 500,000 or $500,000 US. Where are you at the moment?
We're actually now already, we're at 473,000 confirmed. By the end of today, I should know about a little bit more than that, but this time it's from a grant, it's not a private investment. But it shows, we have to take all kinds of capital. I really, as a company, I have a vision to get us off grant money, because I have this focus that our work should be supported by private sector, because private sector has more scalability. And once the market can see profit in the solutions we offer, it's going to be sustainable and scale much, much faster. So we're getting very close. By the end of today, I'm going to hear back about another potential 235,000, as I mentioned. So we're going to exceed our goal, which is perfect. We actually had a goal to raise the money we're raising now by the end of June 2020. So there was a lot of slowdown. We had a few deals canceled actually at the beginning of the year. But once the fear of what COVID would bring subsided, then we started having renewed commitments and even new interests. So we're very hopeful. We even have bigger hopes for 2021. And we're going to be raising a much, much bigger round.
Dibs on the numbers when you finally have them in later on. Stefan, to bring you into the conversation, you fund funds. Now, what has the appetite been like for funds and startups in Africa from your view?
Thanks, Arnold. I agree with what my co-panelist just said. From a Digital Africa perspective, we can highlight three main effects of the COVID-19 pandemic. An overall contraction of the investment market, which means less funds are available. A decrease in opportunities as a result of investors focusing on usual suspects, meaning that fewer markets are regarded as promising, and meaning unequal opportunities for startups. Because while the market is contracting, the process for raising funds has not changed, and startups and innovative tech companies still have to look for investors and continue to persuade them to go to investment. And so as a result, in Africa, only the market where investment processes are more mature can be the ones to attract investors. And we see that VCs and private sector investment is continuing flowing to the usual suspect, meaning Nigeria, Kenya, South Africa, or Egypt. Places where obviously there are great innovators, but not so much an investment culture or process would be more impacted during pandemic times. So the challenge is critical for startups that have started to become successful and that have demonstrated the relevance of their business model. But for those looking at a transition to scale, the current times are very difficult to go through. And it's somehow a cruel situation because after years of work, you see the end of the tunnel, but you cannot finance your growth because of the contraction of the investment market. Or because your next fundraising round has been delayed until you do not know when. So at Digital Africa, we have looked into this very specific issue, and we have launched a new initiative called Bridge Fund by Digital Africa early November. So it's a new financial instrument that we promote and deployed by Proparco, the French Bank for Development arm for private sector. It is a bridging finance tool, meaning that it is designed to help companies to maintain their activities if their round of fundraising has been canceled or delayed as a result of the contraction of the investment market. We have launched the project early November. We have received already more than 100 applications from 38 countries, and 35% of them have gone through the first eligibility assessment process and are currently being looked at. So among the criteria of this fund is the fact that targeted companies should have been in business for at least 18 months and successfully gone through a first round of raising, which means that they are meant to support at the time they are getting ready for scale. What does it mean? It means that indeed we are looking at supporting both the private investment capacities, but also the startup and the entrepreneur himself. Because for those who were, as I said, and I'm repeating myself, but for those who were about to raise and cannot raise because of the effect of the pandemic, it is extremely critical currently. So this is our perspective for now.
Stephanie, for some of your investors and shareholders, what are some of those critical investment opportunities, those sectors that they seem to be very interested in?
Yes, thank you. As Alex said earlier, definitely digitization is a must. So this is also part of our criteria for the recent fund we've launched. We've seen lots of successes in fintech, obviously. The cashless society is definitely in time of pandemic a must. We're looking also at edtech and lifelong learning because and people and students having to stay home was a major opportunity. So basically all the sectors of what we call the real economy going through digitization are also seeing a great growth, and lots of investors are looking at that, but also B2B and supply chain, for example, applications have known a great improvement and a great major interest from our investors.
Alex, bringing you back into the conversation, you've heard Stephen about the areas that are, they are interested in investing in, or what the investors are interested in financing. Now, which sectors do you think are ripe for that investment? Does it align?
Yes, it does. It does align. As she mentioned, cashless, and what we have seen or what we witnessed during the pandemic is that we saw cashless payments and transactions increase up to a point they hit a 400% mark. Although that has subsided in Rwanda to numbers around an increase of over 50-something% since then, since the reopening. it is still a ripe space. But beyond just payments, I think what is ripe really is capitalizing on that data to build up new business models around lending, especially digital facilitated lending that actually comes to disrupt traditional banking and credit analysis models. Why do I say that? Because despite the fact that digital is giving us a lot of alternative data sets, a wealth of alternative data sets for analyzing a risk for individuals and businesses, we still find that financial institutions, traditional financial institutions, are not really taking advantage of that. And fintech companies in that lending space are beginning actually to service that underrepresented market or underserved market, where companies are digital, whether they are doing it, they're providing services, edtech, for example, or e-commerce is another example. You know that actually this particular e-retailer is transacting. You can see that they have volumes, and all they need is liquidity. So we've in this market, we've seen companies like Benefactors that is providing a service to small to SMEs. So this is going to grow. We think that is ripe for growth, but also sectors that are servicing agriculture. For example, because these are staples. I think earlier to what Christelle was talking about, infrastructure. Let me add to that, utilities. So the utility market, there are things that you actually cannot do without. You cannot do without water. You cannot do without electricity. Education we just saw it change over the last couple of months to going digital and more adoption. So as that curve grows, we believe that is also going to affect how capital flows into the startup ecosystem. So I want to touch maybe on a point that both Crystal and Stefan were mentioning. So you see that there is a de-risking that is needed. The grant money that Crystal wants to get off into private money, it's only going to come in mostly because certain systems, certain frameworks, the business model has been proven, but investors with return-seeking investors really would not come and handhold you like that. So that's where you see that sectors that are attracting this kind of funding should also be de-risked to a degree, to the level that they begin to attract investors to that.
Alex, great that you bring up that issue, that comment on alternative sources of funding. Crystal, bring you back in the conversation. Alternative sources of funding. What have been the major sources of funding for something like, a water sanitation project like yours?
Yeah, for us, grants do play a big role, not just grants from organization, but from prizes and challenges. One, there is a lot of focus in the world to design new solution, and innovators and designers are rewarded with challenge wins and different prizes. So that's kind of a source for de-risking money, I would say. Many people are willing to offer you financing for piloting your innovations. So it's something actually that's improving within Africa. Before, when you had an idea and needed to even prove the concept or build a prototype or run a pilot, there was really not much financing available, and that's a lot of money available for trial and error than there was before. The other source, honestly, for not just a sanitation project, but infrastructure utility, is revenue. It sounds strange, but when we started as a company, most of our clients were willing to pay us an advance amount before we offer them the service. So this kind of works as a way where your clients kind of finance you to be able to offer them the service. And it's something that naturally in Africa happens in many markets because entrepreneurs don't tend to have the running capital to offer you the service before you pay them. So it's something that I encourage other entrepreneurs to really look into. How can you structure your service or whatever you offer to have somebody pay you an advance and then a later payment? Of course, before that's how we bootstrapped as a company, but as we move to scale and grow faster, we're actually financing our clients now. So instead of waiting for the client to come up with the advance money, we actually do the service and then ask them to pay us over the next year as they get the money for our services. So this is something when you're starting out as a startup, it's something important to exploit, to look at those challenges and design, your innovation, your designs, see how you can monetize the fact that you are being innovative and creating a solution that has so much potential for impact. So those are the different services I see being available. Government is stepping in as well. There is the Recovery Fund. There is Youth Connect, which is kind of in the challenge category, but it's still at a very small degree. We don't. If you're looking to build a water infrastructure, for example, you need around $50,000 to $100,000. That's not money you can get from government. But you could potentially get a contract from the district and get 60% of that as an advance to be able to offer your solution. So there's different ways startups can try, and definitely government with the Recovery Fund, they're giving, I think, a maximum of that 5 million Rwandan francs, which is about $5,000. This is a good thing for entry and something that only government can really do. And I hope we see more of that. We see more angel investing or angel bridge funding from the government, where they can really offer this money to just keep people alive and avoid cash crunch issues that are making so many businesses close now.
Crystal, thank you. They're very detailed and elaborate answer. Stephanie, bring you back into the conversation for the closing remarks. Unfortunately, we have run out of time. Do you think policy on the continent aligns with what investors are interested in? And you have exactly a minute for that answer.
So I will not answer by yes or no, even though I only have 1 minute. I think policies are on a good track, especially if they work at a Pan-African level, because we have, there've been many policies, whether in Tunisia, in Senegal, in Rwanda, of course, in South Africa, Kenya, Nigeria, and all the levers, the very key levers are identified. The question is, how do we support scaling up with a public policy perspective? And I think that includes questions around both legislation and regulation, data, access to connectivity, of course, but also data sovereignty, but also incentives for young entrepreneurs. So I do believe that there need to be more done from direct commitments of public funds, attracting investment by offering local opportunities and packaging and preparing them, and finally attracting investment by easing investment processes. Those are probably key elements for a global public policy making.
Thank you very much there, Stephanie Lois-Grass, CEO Digital Africa. Alex, in your closing remarks, will 2021 be a better year?
Yes, 2021, 2022, 2023, 2024, and 2025. An analysis by IFC shows that Africa's internet economy is growing or is going to be growing to $180 billion by 2025. And that is hugely going to be driven by connectivity and all this digitization that is taking place and access to digital services. So will 2021 be a better year? Yes, it will be a better year, but we have to be prepared for it. Entrepreneurs have to be prepared for it. Digital content developers need to prepare for it and take advantage of the upside that is coming in the next coming years.
Thank you very much, Alex Nade, the CEO of the ICT Chamber in Rwanda. Crystal, what does 2021 hold for Water Access Rwanda?
A lot of exciting things are happening. I'd encourage everybody to follow our channels and keep up with the different new initiatives we have, but also the scale that's going to come from scaling all our different products. We have home water systems that we're introducing for urban markets. We have an irrigation mini grid that we're going to be piloting next year. We're going to be hiring a lot of people, so it holds a lot of promise. And we've actually been made better by 2020. It's the first crisis I faced as an entrepreneur, and I think many people in Africa had never really experienced this kind of economic slowdown before. So I learned a lot as an entrepreneur. I think the ecosystem has matured because of it, so I'm very excited about 2021.
Thank you very much. Crystal Kwizera, the CEO of Water Access Rwanda, Alex Nade, CEO of Rwanda ICT Chamber, and Stephen Eloise Grass, the CEO and Executive Director of Digital Africa. Thank you for making the time and joining us, ladies and gentlemen. That was our conversation on investment during a pandemic and where startups stand at the moment. Now, to be part of this conversation, you can always tweet us at CNBC Africa, or you could tag me directly at The Real Kwizera. Have a great day.